and have documentation of what's been done before. And it helps in the future to make things a little bit simpler if we can kind of think from a certain standpoint.
So Mike, why don't you guys tell me a little bit about what you guys been talking, all of you, in regards to what the ultimate goal would be.
Yeah.
Then I'll plug in the rest so they would understand the vision. And then go from there.
Okay, so you want me to? Yeah. Okay. Well, the ultimate goal right now, as we all are here, is to build a sales channel, a direct sales channel, and an indirect sales channel.
Yeah.
Meaning that we're going to have a team of individuals who are going to basically be managing the phones when we have leads that are coming in or we have leads that need to be contacted. Some of our private investors are going to be, we're going to need to reach out to them directly and explain to them the benefit of working with HIS. Some individuals through radio or direct advertisement will be calling in wanting to partner with HIS. And that's just the inside channel of it, the telesales side of it. But then the other side of it is a face-to-face division. When we leave the office, it's very important that we keep a certain image, because if you're out having lunch or you're out at some sort of lounge or whatever, and you're telling someone, oh yeah, I deal with hard money and I deal with this and I'm able to close $1 million deals, and you look like you're worth 20 cents, well, that's not it's not a good look. So
I want to zip it back in.
Exactly. So we want to, this is not just us being phone bandits or just on the phone just slamming and looking for a deal on the phone. This is, inside the office, outside the office, portraying a certain image so that we can generate business. Because in a lot of cases, once you get knowledge of the product and how powerful the product is, you'll be out at a restaurant, you'll be out at a grocery store, someone might ask what you do, and coincidentally that could be a lead for you. So it's very important, to kind of grasp this information, learn it not just from an inside sales standpoint, but also from outside and networking. Everyone's going to have business cards, everyone's going to have a wealth of product knowledge, so you're very equipped to do your job and close business. We're going to, not today, but we're going to set some guidelines as far as how many deals we need to close in a week and what the bottom line goal is. And naturally, once you hit your goal or exceed that goal, there will be additional bonuses for everyone. Okay?
Perfect.
That's pretty much it.
In those sentences, okay, so I believe you guys are going to have a couple of roles, jumping on the phone and also, like Mike said, going out there, right, to meet some of the potential clients. One of the roles that I want to show you guys what the goal would be. For example, Candy here, her job is to be out there meeting with all the brokers, all the potential borrowers out there on a day-to-day basis. So she's building relationships, personal relationships, rather than just on the phone, randomly cold calling. So that's her job, so that she could bring them in every 2 weeks for one of the free sessions that we're going to have here in this particular place. In these events that we're going to have, these free events that we call them, we're going to be talking about basic educational material. We're also going to be presenting opportunities for these individuals that come in to participate and kind of create a small marketplace where everybody that comes in is going to be sharing their needs, their wants, and ultimately exchange valuable information to meet those needs. And of course, all related to real estate, because the individuals coming in are brokers. Now, that's only in order to get our name out there with the general public, the public that is doing the business that we provide. And we offer the properties that are wholesale properties at discounted price, distressed assets, and then we come in and offer them the funds as well, the capital. So that is just one aspect of the business. Now, how do you guys get married into that model to all of it, add value? Well, I think jumping on the phone and doing two roles, which we discussed, I believe, and I don't know if that's the same that you discussed.
Exactly.
One of them being, yes, trying to get those borrowers, and we'll have the scripts for you guys to understand how we sell the loans and what we say and cannot say. We already have the guidelines as well, so you guys would understand what our limitations and pricing is in regards to rates and loan to values and the rest. But most importantly is also understand what our competitors are doing out there, so that we would have the tools and resources to use at any given point or during the conversation. And the other thing is, aside from talking to potential borrowers, we also want to discuss the opportunity of these people on the other side of the phone to come into a paid event. We have enough material and resources to offer the people that want to learn about flips, resources from different forms to fill out of how to complete a rehab well, contractor sheets, analysis tools, and ultimately educational material from not just how to flip a house, but also how to organize the project in a software that we have, how to actually make sure that your contractor doesn't actually walk out of the job or even file a mechanic lien in the property because you didn't pay them. Go for it.
So it's a one-day paid event that we'll be attending as well for our own knowledge, right?
Oh, definitely, yes.
And this first one is already on the calendar, correct?
The first free one is. The
Okay.
paid one, we're still trying to find the exact date.
Okay.
Because that would be at a different location. We're members of I don't know if you guys been there, the Center Club over next to Sigerstrom Hall in Costa Mesa. That's South Coast Hall, I think it's called. Yeah, across the street from South Coast Plaza. And it's a beautiful venue. So that's where we're going to have these places. But we're trying to find out the exact date. But it'll be almost 3/4 of the day. Half a day to 3/4 of the day we'll offer breakfast and lunch. And it'll be a paid event because we'll have multiple people coming in, even special speakers coming in to talk about a specific topic. We're going to have 4 different events, meaning every month that paid event is going to be on a different topic. For example, the first month it'll be only on flips, only on the things that you need to do to make a successful flip. Then the next time around will be on cash flow. How do you actually grow your investment portfolio? And all of this ties back into our philosophy on investing. We have 2 different entities. One, and I need to step a little bit back to give you guys a little bit of what we do, so you guys will understand how this comes into play. We're not just trying to figure out, well, let's just throw in an event, that's it, let's see who comes in. We've actually done a lot of educational material. If you guys go online, you'll see that we have a lot of content. But that comes in because we've actually done this type of events in the past. So our philosophy has been, we believe in a 40-40-20 plan, which is 40% of your investments have to be for appreciation, right? You don't want to put all your eggs into one basket because we know what happened in the past where people purchase hoping the properties will go up and then it crashes, all of your assets go up. So 40% appreciation, 40% cash flow. And of course, so that the cash flow sometimes is not hundreds of thousands of dollars that comes in, but as you start growing it, hey, those couple $100 that come in pays the bills. And you continue growing it until ultimately that covers all your overhead and you could actually grow the higher risk investments. So 40% appreciation, 40% cash flow, and then 20% high risk, high reward. And high risk, high reward includes developments, for example, or even going into commercial assets, buying a whole home park, and doing different type of activities within still the same real estate industry. And we've done that under HIS Capital Group. We've done the investments on all the different aspects of our balanced investment approach, where we try to diversify it out. Now, one of the things we also just did is said, hey, since the market is a little bit short of inventory, so what we needed to do to get out there is offer lending. And by us going out there to you, not just to say, hey, give me the deals that you have so that I can buy them. Now, hey, you do them. Here's the money. We will lend it to you. Oh, this time I don't have the money. What did you do? Perfect. So it's a win-win situation because if you do the deal, then we win. But if you pass it on to us, perfect. We're more than willing because inventory is short as it is. So we're able to open up the funnel of people that we deal with and offer more opportunities. And also opportunities for our staff to offer these services, both here and Florida. So we do that in both states. But going back to this balanced investment approach, is the 40-40-20 plan that we're trying to break into these 4 different events that we're going to try to set up on a monthly basis. So the first one, like I said, is the how to flip a property. And everything's been put together from even offering something we call the flip in a box, right? Which is even a software that people can really follow what we've done on our own flips. And it already has pre-built tasks. It even reminds you when to turn on utilities. It reminds you when to turn them off after you sell the property. It helps you reconcile for bookkeeping, so that all you have to do is this Excel sheet that we have in there, you just print it, give it to your bookkeeper, and that's it. You don't have to do anything else to manage all the costs, all the contributions you put in, and expenses, draws to your contractor. So those are some of the things that we're planning to offer to the people that go to the event. Go for it.
So things like that, free software for flipping, this marketing has already been prepared, so we have something visual that we're either emailing or sending.
Yes.
Okay.
So let me kind of explain to you what we're going to be doing. So the beginning of our day, we're going to be strictly going to get people for this event. That's from the morning hours. After lunch, we're going to be calling Florida. So we're going to kind of target Florida second part of the day. But the beginning of the day, as soon as you guys get in the office, our goal is to get these investors and people to this event, this paid event. The benefit to you guys is that's an immediate profit for you guys or all of us on the phone. So the beginning of your day is your short-term immediate cash. The second part of the day is Florida, where it's just a larger compensation course, but it's a longer sales process. So I know that, a lot of you guys, when we were interviewing, were concerned about, what's going to happen. I know that the sales cycle may be 30 days or, 45 days before a deal funds. This will give you some immediate revenue, which, literally the following week, people who are very interested in joining the seminar or going to the event, that'll be some immediate cash for us, just for explaining this, the benefit of this event to a pool of individuals who are interested in coming.
Yeah, so the goal, exactly just like Mike said, would be to work on the immediate reward, which is, hey, let's get people to go to the event, and let's sign up these paid members, and then ultimately start building up the pipeline. As you guys know pretty well, it takes some time to build up the pipeline and to make sure that all of that is, self-generated and sustainable. Because you'll probably take 3 months right now, 2 to 3 months to build a solid pipeline of borrowers, and then maintaining all of those. We will give you guys access to the software that we use to manage those relationships. We have a software that basically, the moment you put in the lead, it does all the campaigns for you. If he just comes in as a lead, he basically sends out emails to the client, and then ultimately what it also does, it sends you guys individually a reminder when to call. So, and I believe he sends 2 emails to that person, then he sends you a reminder and say, now you call them and talk to them about this. Then another email, then another phone call, and then 2 more emails. And basically that's it. I think it's a 7-step process. If after those 7 steps nothing happens, it goes back into the initial queue. Until you can actually kill it and remove it if nothing happens, right? So anyway, that's something we could definitely do. More than anything right now, I think the main goal is to sign up people for the paid event. So all of those resources that I was talking about are going to be presented and given to the people that come in. So, and that's only for the fix and flip model. Then we have the following one. We could do something for buy and hold, just like I said, or how to grow an investment portfolio of cash flow, right? So that's the next one. The third one, we're going to go more in depth into commercial real estate. And from how to analyze the commercial real estate scenario to even how to do a loan on commercial real estate. What are some of the different underwriting requirements that go into it? People understanding everything from a debt service cover ratio, net operating income. I mean, different things that the individuals just focusing on residential real estate may not ever have to look at, right? But it is a different animal altogether, and commercial real estate could be very profitable both on sales if they do commissions or they just buy it for somebody else, if they invest in it with their own capital, or if we want to originate some of those loans. we're going to go into becoming the bank. How can you as an investor can become the bank? How can you actually secure your capital the same way the banks do? By offering mortgages. We are licensed to do private mortgages in California and Florida. So these private mortgages, there are some laws that we need to make sure that the investor understands. But investors can actually, if they follow the same balanced investment approach that we talked about, they should have in their cash flow balanced option, they should have also private mortgages. And that's what we do. So we talked about all of the regulations that are going to affect for the state of California, different from the state of Florida, and how they can protect their investment with secured mortgages and deed of trust. Okay, so we will go into that. And that's the last one because that does take a little bit more understanding of real estate. There are some terms in there that people need to get familiar with, but ultimately that's the last piece that we want to talk to them about. For all of these different 4 steps, we have marketing material, we have high quality content, which is similar to those copies that you guys have there in front of you. We have one brochure for flips only, which has been finalized, all the beautiful images and the rest has been finalized. It talks about everything you need to do about for flips, how to flip a house, right? This brochure is 106 pages long. Then same with another one for buy and hold. So all of these brochures have their quality images, quality content as well, and if you present that to people in a very nice venue, and you give them opportunities as well, it's a win-win situation. A lot of the people that are doing events sometimes don't even present the high-quality content. They just give you a Word document that was printed in black and white or an Excel sheet, and there you go, right? And try to make some money with that. But here what we're trying to do is give valuable content, quality content in a very good venue, and also giving money-making opportunities. And the money-making opportunities on each one of those events will be having live properties. One of our departments here in-house is always looking at acquiring new properties on a day-to-day basis. And these properties fit either the cash flow model or the appreciation model. So they're distressed, ugly properties that are either REOs or short sales. We make offers on these houses. So we come in, and after the event is done, we'll say, like, hey, by the way, this is a presentation, a PowerPoint with all the properties we have live. So if you're interested, go to the back, and once you fill out the letter of intent, we'll give you the properties so you can start looking at them, and we start qualifying individuals. So we want to start doing that. In fact, the first event we have with that model is this Friday in Philadelphia, where we're going to have it in live properties. And these are live properties from Florida. These are cash flow properties, where my partner, after he's done with the presentation, he's going to provide that opportunity. People have to sign a letter of intent. The moment they sign the letter of intent, they get a folder with all the assets that are available, and they can start making offers. So if you give those live opportunities to people that are attending these events, it's a win-win. A lot of the people doing events, in fact, Steve and I went to Vegas to see another guy doing events. The opportunities that are in the table when they're not money-making opportunities. Well, it's not for the one buying. They're money-making opportunities for the one presenting, but not for the one buying.
See, that's huge to me because if I'm looking to, or someone explained to me or offered me to come to an event, the biggest question is what's in it for me. You understand? So I'm going to, join an event and it's only in it for you presenting it. Why would I come? But if you explain it to the person, like, here's the, we're going to have this one, this one, this one, this one. There's going to be something in there that's going to ring a bell and it's going to make me want to come to the event. It's going to make me want to come, especially just me, how to become your own bank. If one of you guys explain it to me, I'm there. I like that. So that would be a light bulb will go off for me. I would really be interested in that. So I think that what you said is definitely key, especially if you guys already been to events and the event presenter is the only one benefit as opposed to the people going. That's going to separate us hugely.
I mean, these events, more than anything, we want to, it's great marketing. I mean, these events, educational material, we're not a non-profit organization, of course. We do want to give out the content, right? But rather than spending hundreds of thousands of dollars on radio ads and TV ads, I think it's better just to throw in it with marketing material and education. because that has a stronger impact on the person receiving that than just going to one ear and out the other. Because they'll stick with you. Oh, I learned this through HIS Capital, or I went to one of those events. And we're not there to sell you and then, do an additional sell all the way through till you get out of the door. You have multiple people trying to get something out of you. We're not there. If you go there, you do have to pay for the event, but after that is just to give you the opportunities and the resources for you to do business with us and the way we do business. Because see, there's a marketplace out there of multiple products and resources that are out there. And we're always going out there to get the business. But more than anything, what we want to create here is we want to create an ecosystem of almost like our own commerce within our office, within the events, where people understand how to do business with us. And I think it just becomes a win-win situation doing it that way. Right? Steve, what else?
I have a whole different realm of stuff to talk about. But what I want for you guys to do is just tell us a little bit about yourselves, because everybody's new to each other.
Okay.
Ladies first.
Business or personal?
Business.
Okay. My career basically started as a medical transcriptionist. I was a secretary in the field for different Fortune 500 companies, and it just wasn't enough money. And I sat back and thought about what could I do to reinvent myself without a college degree? What had I heard? And one of my friends was a medical transcriptionist. So I just started scouring the papers. I read the yellow pages. I did everything I could to self-educate myself. I found someone who was willing to mentor me, and she gave me a very paltry amount of information to get started. And I literally started scouring every paper. This is before the internet. Every paper, every local paper for my industry. I got my first client, took my rent money, bought a computer, and the rest is history. He referred me, and that turned into a 20-year business. And in that capacity, I had to do my own marketing, my own research for other doctors, offices. I had to learn a plethora of different technologies because every office had a different platform. And if you wanted that business, you better know how to transcribe or at least fake it till you make it. After our industry came up with voice recognition technology, where a physician could speak to equipment instead of needing a human being, that drove the cost way down, and you were no more than a high-paid receptionist. And you spent all of that time earning those technical skills to be able to transcribe at lightning speed. So I sat back, once again, reinvention time. What's the thing that is my strength? What have I enjoyed doing most over the past 20 years? It was going out and talking to the doctor's offices. I made it a game because doctors are really hard to approach. They always have one foot out the door. They're very condescending, and it was a challenge, but I stayed in business for 20 years, so I reinvented myself as a saleswoman extraordinaire, but I was getting circular filed because sales offices weren't recognizing how my skill set transferred over, and I certainly wasn't using the right buzzwords. My whole vernacular was medical. So I just got on the computer and found out what you guys call it. Lead generation, okay. Outgoing, charismatic, whatever you want to call it, I'm all those things. And some things I didn't have a word for, I just was those things. But I never had to put a word to tonation or, the positive upsell or anything like that. You do that, it's just innate, but you don't have a label for it. So I reworked my resume, the phone began to ring, and I landed most of my time in the real estate arena in similar to what you're talking about. We were educating investors and real estate agents about the niche market of probate. This was at a time when short sales and foreclosures were on the rise, and oftentimes they'd work that entire deal only for it to fall out because the short sale was taking so long, now the buyer was no longer interested. There were all sorts of things happening, and they really wanted to learn about this niche market of probate, and we sold it as it not being tied to the economy because people always die. And so we put a bunch of marketing materials together. We scoured all of the courthouses, Orange County, LA County, and all the suburbs, pulled all of these files, and our unique selling point was, we'll not only tell you about probate, we'll hand you the leads on a silver platter. Granted, that meant every real estate agent that we trained was going after the same leads, but I would sell it to them and say, there's no one like you, though. I mean, I don't want to have a conversation about your competitors. Let's just talk about your approach to this property.
Mhm.
And I would get them to stop focusing on the competition, just focus on your own efforts. How many times are you going to follow up with this individual? And so I just made a lot of relationships that way, and it gave me the confidence to set out upon other sales opportunities that had a more lucrative payoff, and here I stand. Or sit.
How about you, Herman?
Well, I've been a business entrepreneur most of my work life. I created two different companies in Colombia, South America. One of them was a necktie manufacturing firm. It became the largest necktie company in Colombia, and it's still very successful. The people that own it do very well with it. And then I also had an international conference operation. We specialized in information technology, security, and audit. So basically, people from the banking industry would participate. And I had representatives in different parts of Latin America to advertise and sell the event. So I've been in event planning and event development work. And then we went through a financial reversal. It was a turning point in our lives. My wife and I and two kids moved to the States in 1998, and I had to start from scratch. So the skill that I had that was useful was sales. Because if you have a business, you have to sell. So I was involved in selling. I started out knocking on doors, selling yellow page advertising for a local company. And as I was doing that, then one of my clients and I got involved in a dialogue and started talking about business, and I ended up selling swimming pools and swimming pool remodeling services. And in both cases, I became the top salesperson. I love selling. I love interacting with people and getting involved in transactions that are mutually beneficial. So that's basically in a nutshell what I've done. After that, we developed some home shows. We were producers of home shows locally with my wife, and have done some consulting work for some companies, and that's in essence what I've done. What appealed to me initially was the advertising on Craigslist that stated that we would work from 10 to 3, and the potential income was significant. I'm aiming to make a lot of money. So that's why I'm here. So basically, I'd like to know what the job is all about, and if I can help you guys produce revenue and profits, and I benefit from that as well, love to do it.
Excellent. Good. And yes, I think we just need to define what the ultimately goal. Well, number one is, I think you nailed it, Mike. In the morning, if they're out there just trying to sell the event, and then in the evening, Florida. Now, let me emphasize on Florida why those hard money loans or the lending option is easier of a sell in Florida than here, and easier for you guys, not for us as a company more than anything, because California is a broker state. It does require everybody that's selling any real estate product to be licensed. And if you guys are out there offering the products, necessarily, you would need to have a real estate license. Now in Florida, it's a different story. Florida is open, especially as long as we're not dealing with consumers. We're not offering our services to the people that's going to live in the house, use it as their primary residence. Then we're selling a business transaction or a business purpose loan. That's the real definition. You don't need to be licensed. So we're basically dealing with real estate professionals professionals, brokers, realtors, investors, general contractors, and so basically that's who our target audience is, right? So in Florida, we do not need to be licensed. We need to be on the phone. Now, whether in the morning, the time difference, they're 3 hours ahead.
Right.
So we need to consider that if we're going to be calling maybe what you said at 2 or
We're gonna call California from 10 to 12. We'll call California from 12:30 to 3 o'clock. We'll call Florida.
Okay. Perfect.
Wait, no, I have it backwards.
I think
backwards.
first Florida, right?
Florida's first. I'm sorry. 10 is Monday. 10 to 12:30. We'll be calling Florida.
Yeah. Now,
We're gonna call Florida first, and then we're gonna call California.
you may want to switch it back and forth and see what works, because a lot of people, if we call them in the morning, that's going to be noon to 1.
Yeah.
People are going to be in lunch. Now, and remember, in our industry, people work till 10 at night. They don't. The phone doesn't stop. As long as we call them, I think within reasonable hours before 7, it's still going to work fine.
The thing that about California, and this is just my experience from living here, California people are, I don't want to disrespect anyone, but they're kind of, let me start my day at 11, 12 o'clock in the afternoon. They're not like, well, East Coast people will start early. So we'll figure it out. We'll try it from both sides and see what works best. But, basically one portion of the day will be California, the other portion will be Florida. And we'll kind of segue and see how those, what we're getting a better close ratio from both standpoints.
Okay, so then we'll just define that. We have a few scripts that we're going to finalize to try over the phone for both things. For Florida, well, we already have all the scripts for Florida to sell the product and material. I think we just need to finalize the event details in order to have that done. But that should be done.
Yeah, I'll have that done
Really
before
short.
you guys
Yeah.
start. It'll be very clean. And the way we will, from my standpoint, when we say script, this is something that, when you learn it, it's going to sound like you're talking, not, this is HIS. We are good. That's not how. That's not a script. A script is a conversation, and it segues the client to walk them down the path we need them to walk down. So if you learn the script, of course, you can move away from it. You don't have to sound like a robot. But we're going to practice the script over and over and over. We're going to call these guys and let them be hard on us and be able to handle objections, handle rebuttals, and be quick on your toes. So we're going to really nail down what we're saying. That's very important to your success, what you're saying over the phone.
Yeah, we have a list of the top 20 objections. And all of these tools are, like Mike said, it's not just for you to memorize it. Of course, you guys have a lot of experience yourself, but just to have a belt of tools that you could draw from at any given time, depending on the situation. And but we'll hand those to you, and then, of course, we count on your skills individually to use them as you need. What else we need to cover, Mike?
I think that just the basic product. Like today, I want to kind of just go over the product itself, with hard money lending and things of that nature. And then tomorrow, I want to focus on the scripts. What we're going to say. I kind of want to spend the whole day tomorrow on what to say over the phone, because it's very easy if you're on the phone with someone and we're selling anything, and you have the person interested. You can tell the person honestly, you know what, this is, I've never been asked that question before. I'm just kind of new here. So if you don't mind, I want to place you on hold and get a firm answer for you. And they're not going to hang up on you. They'll wait, especially if they like you. So the most important thing is to get that initial hurdle overcome, and then, certain situations you're going to have additional questions. But today I just kind of want us to go through, the product, and then tomorrow I want to focus on what we're going to say over the phone.
Okay, so if you want, let's go over a quick segment of what we do and how we do what we do and why.
He has a question.
So we want to market as a hard money lender or a private money lender?
No, private money lender. See, and that's details that we need to just go into. The word hard money is not a very well received word out here. In the East Coast, it's okay. In fact, people call it hard money all day long. But here in Florida, in California, they hear hard money, it's like, oh, 15% rates, 10 points, they're gonna, it's like shark loans. So we need to stay away from that and call it private lending. But we'll go into this, and once you see the material, you'll learn the right lane going multiple ways. Okay? But now, understanding why private lending? Why do people need the type of product that we offer? There are a couple of reasons. Let me have this. Okay, let me read through it.
You go ahead.
No, but the individuals that need credit are 3 or 4, in fact. I need to go back to this. But they need either the one that has really bad credit issues. I'm talking about everybody out here in Southern California that has been active either in real estate or mortgage lending that experienced the current market crash. The majority has had some credit issues, right? There's a few that probably didn't get hit as bad, but people with a 620 FICO score that had mortgage lates, car payment lates, credit card lates, even foreclosures, bankruptcy. Those are the types of clients that we're looking for. Now, there is a risk factor that goes into every single client. As we face someone that had a 500 FICO score with a bankruptcy that we just discharged 3 weeks ago, well, do we really want to deal with that individual if they're only putting 5% down? No, right? But do we want to deal with someone that has 20% down, that maybe had a few mortgage slates 12 months ago, that had a couple collections that is working out? Yeah, I mean, those are individuals that had a couple bumps in the road and they're trying to fix them in order to do a few developments. Number one is credit issues, like I said. So we will tell you what the guidelines look like so you guys will be able to identify those credit needs. But that's one of the main reasons why people come to us and that they don't go to Bank of America. Second is full income documentation. Most banks, if you go to Bank of America and you try to get a loan from them because you're going to buy a distressed asset, you're going to buy a single-family residence that's the ugliest house in the block, well, Bank of America is going to want to see your financials. They want to see your 2-year tax returns, and then they want to see your bank statements, and they calculate something called the debt service. The debt to income ratio, and which is if you make $1,000, they don't want your mortgage to go past $4,500 or $450 in this case, 45%. So if you make $1,000, they don't want that to exceed $450, and that includes your mortgage payment, interest, taxes, insurance, and principal. So, and then on top of that, your expenses in your credit report as well. So all of your expenses cannot exceed 45, in some cases 50%. So that basically eliminates a lot of people out there trying to get a loan in this case. So,
Hold on. What did he say?
Debt to income ratio, a lot of those people are disqualified from getting loans from traditional lending institutions like Bank of America because you have to have a certain debt to income ratio. It looks at your credit report and it looks at your mortgage and 2 years of your financials.
You got that, Herman?
Absolutely, yes.
So, back to number one, credit. Second is income. Okay, income is the second issue. They will need to see all your financials, and most people, of course, as we know, there's a lot of high employment, and that will be one of the objectives. The third one is the property itself. The property that the developers are buying, and the developers, let me step back a little bit. Our borrower, we call them the developers, right? Because they're going in there to purchase an ugly house and making it the best house in the block. So they are really developers. At a smaller scale than the large developers or the construction companies, but they are still developers. Okay? So when I use the word developers, I'm talking about the borrower, the one that's obtaining a loan from us. And these individuals are working with brokers or they're brokers themselves, the agents, and bird dogs, which are people out there submitting offers on their behalf, to the banks, to distressed probate properties, for example. And they're looking to acquire this property in order to fix it up and sell it. The problem is that if you are a broker, you bring me a property, you say, Luis, I have this property under HIS Capital Group ready for you to buy it. The offer was accepted by the bank. Well, I get the offer, and now I run to Bank of America across the street and say, Bank of America, can you give me a loan on this property? Well, Bank of America is going to say, okay, income, you're fine. Credit, you're fine. Wait, the property itself is beat up. I cannot lend you on that asset because the collateral, I'll foreclose. I don't have the expertise. I don't have the resources to take that property back. As you guys have seen, even right now, the properties that where people were living in, banks don't even have the ability to foreclose on today. Now, let alone on a property that was purchased by a developer that's probably going to gut it out and leave it on the frames alone. The bank is not interested in foreclosing on any of that. So if the asset does not meet conventional or FHA standards, which are the two biggest resources for funding today, the banks are not going to lend. Let me expand on that. There are three buyers of real estate today in the marketplace. Number one are the buyers that put very little down payment with government financing. So they put 3%, 3.5%. They get an FHA loan or a VA loan from veterans. And sometimes the down payment can even be gifted. So that's the good thing. So you can get close to 100% financing. The downside to that is, well, you need to qualify based on income. So you could probably get a bunch of your family members to co-sign for you and you'll ultimately get into a house, but it's a lot of paperwork and it takes a lot of time. And on top of that, just to go back to what I mentioned about the property needs to meet the FHA standard. If I am a borrower purchasing this property with an FHA loan, well, we do an inspection. And if the property doesn't have the right heating units, it doesn't have the insulation, it has roof damage. Bank of America and FHA, which is the government arm of lending in this case, they're the ones buying these securities or these assets, they're not going to fund the loan and they're not going to allow me to buy it. Okay? So that's one of the issues why I specify and I go back into the property. Property is one of the biggest factors why people come back and they need a hard money loan from us. And I'm calling it hard money until it clicks for private money. Okay? So people need a loan from us because the property is not going to meet the requirements for FHA. Same with conventional. These properties are too distressed. Sometimes they were, we've seen properties that have even blood stains on the walls. And we've seen properties that have, of course, holes all over the walls because people were digging or trying to destroy them. No cabinets, roof damage, right? So all the ugly that you can think of a property, I think we've seen it pretty much all. And no bank is going to lend on that. So I'm just going to recap. Credit is one. Income is the second one. Third is the property itself. But then there's another factor that also represents a lot of the buyers that we get. And sometimes the property may meet the requirements for FHA. Sometimes the borrower may meet the income and credit requirements to get the loan. But the industry, especially the lending industry, is still dealing with a lot of underwriting headaches. And time is the fourth factor. No bank today that I know of, in fact most of us would probably attest to that, would agree that a loan cannot be closed in less than 30, 45 days today. Why? Number one is because, of course, they have to go through all these financials on a borrower, qualify them. Then all these banks are compartmentalized so that one arm doesn't know what the left is doing and the head is moving. So the file has to move from so many different departments that it takes time for them to process in mass volume. So time is of the essence. In this case, if you bring me a property, again, so the property meets the requirements for me to go to Bank of America and get a loan from them. I meet the borrower requirements of credit and income, but I only have a week to close. Am I going to risk going to Bank of America and lose my deposit or lose the opportunity, or am I better off paying someone a little bit higher rate in order to close it and not lose the opportunity, right? And if we compare what the cost would be between what Bank of America would offer me 45 days from now to what I would offer someone in a week from now, is very minimal. I mean, I'm talking about, let's compare even a 10% rate that we would offer versus a 4% rate that someone else would offer. So we're talking about 6% indifferent, right? Now, if we were talking about $500,000, well, that's $30,000, yes. But there are it really represents, the project itself may be a 6-month long project. And I have to expand on a different tangent, or go into a different tangent real quick, to explain what the timeline of these projects looks like. When you're a developer, you are always thinking on 2 stages when you buy a property. You think on something we call the A to B and the B to C. Okay, it's basically A to B and B to C. So when you buy the property, that's the A to B transaction. And that means you're buying it for $100,000. Okay, you're gonna pay closing costs. Then you're probably at 107. And now that is your total net purchase price, is your purchase price plus closing costs. Okay? Then on the resale, we call it the B2C. My goal is to buy this asset and then sell it in less than 12 months. So if I'm selling it for $200,000, I don't net $200,000. The escrow company is not going to send me $200,000, right? They have to charge some fees, and then I have to pay a broker to list the asset. I have to pay inspections, termites, and the rest. So after I sell it for $200,000, I probably net $175,000, $180,000. Okay, that's really my net. So on the A to B, I'm looking at what my true purchase price will be. On the B to C, I'm looking at what my net to my pocket will be. Now, the difference really, as of right now, you could probably say, well, that's your profit. Well, not yet. Because in order to get the maximum price for this asset, I have to put some money into it. So you're right in between the A to B and the B to C, you actually have project costs. You have the rehab cost, you're going to put 30 grand into it. Then you're going to pay for utilities for, let's say, 6 months. You're going to pay for permits, right? So all of these additional costs are your project costs. So if we look back at the timeline, you buy it today on January 1st, 2015. You sell it in July 1st, 2015. But for the first 4 months, you actually spend those 3-4 months rehabbing the asset, with marketing it, right? Staging it. You probably put some very nice furniture, painting it the right way. So you did all of that in order to get the best value for your investment. So if we look at the scenario again, you bought it for $100,000. Your true net is $107. You sell it for $200,000. Your true net is $175. So you have $68,000 in between. But if you spend $30,000 in rehab, and let's say another $6,000, $7,000 marketing and the rest, you're really netting $30,000 in this project. So is that a good return? If you're looking at $30,000 in maybe 6 months, right? Well, it definitely is, especially if you're using leverage. And leverage is the loan. You're leveraging your capital to acquire more and increase your buying power. So you got $30,000 out on this investment, and if you were to buy it cash, you spend $107,000 plus $38,000 on the project cost. You spend, let's say, $160,000. And I'm sorry, I'm bombarding you guys with a lot of info probably, but if you have any questions, please stop me. So you're probably total in $160,000 worth out of your pocket if you buy it cash. And you got out $30,000, right? So would you be better off getting a loan, let's say, for instead of $100,000, maybe $80,000? So now you only come in with $20,000 down payment, and then you also put your rehab costs and the rest. So total, let's say you're $60,000 in, because now that we're giving you a loan, so you're $60,000 in, and then you still got the same profits, $30,000. I mean, wouldn't that be nice? If you could do this multiple times throughout the year. In general, the cycle would be about 2 times, 1.8 times per year that you can do this. So when you present that opportunity to an investor and say, hey, yeah, if you buy it all cash, you'll make a decent living, you'll be fine. But what if you really know how to do this, then leverage your money. Grow your purchase power, because now your $160,000 that you have in the bank, rather than putting all those eggs in one basket, just diversify and buy multiple projects, minimize your risk, second, and then grow your return on investment. You're tripling your return on investment, or more, in fact, in this particular scenario. You follow me so far?
I have a question. So do we require the investor to show proof of funds of exactly what they have? So you can possibly say, well, as opposed to if you have $300,000 that you want to utilize, then you can buy X amount of properties, because now we can kind of spread those out as opposed to just taking $300,000 and buying one property.
Yeah, yes, and we want to see, we don't care if the money comes from one of your partners, for example. Let's say you are the borrower and you have $100,000 in bank, but you want to actually grow that into multiple projects, and you are missing maybe another $50,000 that you're getting from a property you're selling or that one of your partners is putting in there. As long as you have the expertise and really you have the liquidity to make the mortgage payment. See, in California, compared to any other type of loan, in California, one, as the lender, has to look at four things. One is which is the ability to repay, which is broken into four things. Ability to repay is what qualifies you as a borrower for these type of loans. And ability to repay is what also sets you apart from a consumer to a business professional. So let me grow and expand on ability to repay. Ability to repay is number one, having the capital to complete the project. So you have three things: is the down payment, you have the rehab cost, and you have at least 6 months of mortgage payments. So that is what California defines as the ability to repay. Then the fourth item,
What was the last one, Luis?
Uh-huh.
Down payment, rehab costs, and what?
Carries cost.
and carrying cost, which is your rehab cost and miscellaneous, right?
That's the one. Thank you.
Okay, so those three things they all have to do with liquidity, with cash. The fourth one has nothing to do with liquidity, but has a lot to do with, and only with expertise. So if you have at least one project that you've done, if you have some expertise, then you are basically a professional developer. You are a real estate professional. If you have a license, you are a real estate professional. That qualifies you as having the experience. And lenders usually do that. Most lenders will ask you to fill out a questionnaire and to send a track record. Some might be more lenient, right? And we've grown to find the middle ground where we're lenient with experience, especially if they're, let's say, if they have a license, a real estate license, and things like that. The reason is, if you don't show me ability to repay, if you don't show me, in general, ability to repay, which are those 4 points that I mentioned, and I do a loan, you could hide under predatory lending later. You could hide under the consumer law.